Hey, Kevin here, top 1 financial advisor and best-selling author, and we are here to talk about the stock market. Based on yesterday's video and a lot of the comments, none of us knew, except for 1 or 2 people, that Dillard's was still alive, let alone that Dillard's was up 600%. So, based on that, I had to go back and think and say, well, what are some other retail companies that I should add to my watch list, that I should really keep an eye on, and which ones should I consider investing in for the future? So I've created a list. I think we have 1, 2, 3, 4, 5, 6, technically 7, but we'll just put 6 on the title card. 6 stocks to look into for retail. And let's first lay out the case, because just like I tell you guys, y'all have to figure out like what company are you investing in, why are you investing in it, and what is the case that is supposed to push the stock forward. So we've actually talked about this a little bit before. We talked about consumer discretionary, which are when you got more money, you spend money on these things. So we know that inflation is still a thing. However, even with record inflation, people are still spending money for the holidays and for other things. We know this because in October that retail sales was up 1.6%. So this is one of the reasons why I put out that video and why I like companies like Target. Target is not on this list though. Even though I think Target is a very good stock and a very good company, even though Target is up like 25, 26%, it still didn't make the list because these stocks are doing even better, which is wild to even think of. It's 26%, you don't make the cut, which again is crazy. So I'll start this by saying again, as we're creating these lists, we're putting on the watch list and doing more research. Some of these I'm more interested in others, some I own, some I don't. So I'll disclose that as well, and also say that some are riskier than others in my view. Okay, so just like Dillard's, I'm like anything that's almost anything that's up that high, but I don't want to just jump into it and chase it because I don't know where it's going. I still do not understand to this day how they've done this. Yes, they've cut some cost, but that ain't enough for me to really, really get it. So anyway, we'll get into that in a few minutes, but let's go ahead and get into the list. All right, so I'll start with what I think is the safest, meaning the one I feel like I can trust and not have to worry about at any point in time, and maybe even something I have for long term. Because my context for this is, if I'm investing for the holidays, it's already mid-November. Okay, so if I'm doing something now, I'm thinking probably hold this until January, maybe even a February, because I'm not saying that retail spending is gonna fall off, but I know I got the holidays, I get the earnings report that should come out in January or February, depending on what company it is. I kind of capture that and I can move on to the next thing. So it gives me, December, January, February, maybe 3 months or so, and I should be able to get in at any point and make some level of profit. Hopefully a huge profit, but that's what I would expect. Some of these I can hold for forever, theoretically, or for a very long time and not really worry about it. So I'll start there and then kind of move to the shorter term, more risky in my view. Stocks are more risky in my view. So I'll start here. We'll start with Shopify. Super easy. I think we pretty much understand how Shopify works. I do own the company. I do like the company, obviously. Over the past 6 months, they're up 52%, and they've started to see they've been seeing a lot of growth, obviously. But they're in a good space where they're not the seller per se. They help people sell. They enable platforms so that if you want to sell something, you can sell it on Shopify instead of Shopify selling it. Think like an Amazon. They're like a weird anti-Amazon in a sense. So I can go to Shopify, I can set up a store, it's going to help me, and Shopify is obviously doing quite well. I also like Shopify because they have a white label business side of it too, where companies that you shop at, let's say I'm making this up, a Target or Dick's Sporting Goods, can also have a Shopify back end where Shopify is getting paid for that, but you, the consumer, don't know it's actually a Shopify site, which is really interesting. So again, Shopify is something I'm probably gonna move to my long-term holdings. I've picked up some free shares here and there, and then actually started putting more money into it. So Shopify is one of the ones I do own. I think that's the least risky on the list, perhaps. So we got Shopify. I think you get that, you hold it for a long time, you don't have to worry about it. Next is Etsy. We actually talked about Etsy before. It's up 75% in the last 6 months. And I'll give you the year number here in a second. But so we got Shopify, we got Etsy. I talked about Etsy before. Y'all know I like it. It hit an all-time high not too long ago, if I'm not mistaken. And clearly they are doing well. And I really expect them to do quite well during the holiday season. Then we've got, looking at in terms of risk here, we have Bath and Body Works, which if you watch that video, you know I said that wrong a bunch of times. They're only up 30%, which again is still good, but that's one that I think is it's easy to understand. I don't see it really going anywhere, even though I thought Dillard's was dead. I never thought Bath and Body Works would die, or that they were going anywhere. So they're up 30%. So those are like my three lower risk based on what we have here. So Shopify, that's the one I would, if I'm gonna hold something for a year, I would go with Shopify. If I'm hold something for a year, I would go with Etsy. If I'm doing something for 6 months or so, I might do Bath and Body Works. Now we're getting to the more risky section of companies that, again, I like and that have done quite well, and I'm trying to really figure out where I'm gonna go with these. So here we've got Macys. Now Macys is up 71% over the past 6 months. And again, now I know I live in New York. I've seen the giant Macys by 34th Street. I see the Macys Day Parade. Hampton University will be in that parade. If you didn't know, now you know. But yeah, I knew Macys was still here. I used to make fun of Macys. I also used to make fun of Ford like 5 or 6 years ago. Not the case anymore. So Macys is up 71% in the last 6 months. I'll give you the year because that's a crazy number too. And then lastly on the list, we have Afirm. Afirm is up 174%. Now, if I'm not mistaken, I think they IPO'd this year too, which means that you are taking on a much bigger risk. Afirm is a company that helps to facilitate this buy now, pay later wave, which sounds like it's going to be here for quite a while. So obviously, I gotta look into it, right? Especially if we're talking about retail. And again, long term, it's probably gonna be here for quite some time. The risk here is it is brand new. We don't know how this changes from year to year. We saw with Zoom. Yeah, I always bring up the case of Zoom where it started out really great and then this particular year just not so much. So that is the riskiest, even though it's made 174% in just 6 months. So I'm going to go back through the list real quick and give you what happened over the past year, just to give you a longer view and may help you in your decision-making process. So starting at the top and working down, you got Macys up 321%, half of what Dillard's has done, which again, I not in my wildest imagination where I thought that a Macys, a company I used to make fun of, is up 321%, and it is over a year. Now, if you told me this happened overnight, I'm like, that sounds real penny stock scam like. No, over an entire year, they're up 321%. Because Macys has been around, they haven't died in the way we thought Dillard's did. Perhaps it's a better company than Dillard's. But again, I still need to figure out what exactly is going on with Dillard's and how they're doing that. Y'all got more tips and info on that, feel free to let me know because I'm interested in learning more. So anyway, we got Macys up 321%. You can add Dillard's to this list as well if you choose to. Then we've got here Bath and Body Works up 169% over the past year. Moving down, I have to connect the colors with everything here. So we've got what looks like Dick's Sporting Goods up 164-ish% over the last year. Then we've got Afirm over the past year, which again, it doesn't look like they've been out the entire time. It looks like they went public January 13th is what this chart is telling me. They're up 154%, which obviously time frame is a little bit different there. Then you got Etsy at 129, and then you've got Shopify up 80%. So the worst stock on the list in the past year was Shopify, up 80%. Hard to beat. But these are the companies that I'm looking into. I do own, I don't think I currently own Etsy. I did have a short-term trade for Etsy, but I don't currently own Etsy. I do own Dick's Sporting Goods. I do own Shopify, and those are the two I own currently. The others, I'm looking and seeing what can I do, probably for the short term, only because come December, that's when I do my high level or really my deep dive analysis on what I'm going to, think about in 2022 and how can I rearrange my portfolio. I'm not super active. I like to get in, sit for 6 months, and reevaluate. And until I know and have a safer, a better, deeper understanding about how I think retail spending is going to do in 2022, that I wouldn't hold any of these long term outside of Shopify, maybe a Dick's Sporting Goods, and maybe an Etsy. Those I understand a whole lot more than department stores. Now that's just me, Okay, I do what I understand. I do what I can, know and analyze. And until I get into more of a Macys or a Dillard's or even an Affirm or something like that, then we'll tinker with it. But since I don't know it, I can't commit to holding it for a year. I can't do that. I can commit to buying and holding it for a few weeks, buying it and holding it for a few months to get a short-term swing trade, which we did a video on for that. So I think these are great. I think all of these are great swing trading candidates. But for me, based on what I know at current, which I can always learn more, but right now, I think it's the Etsy, the Dick's Sporting Goods, and the Shopify. I can hold that long term, not worry about it. The others, I'm looking for more of a swing trading opportunity. When can it fall into the right level for me and hopefully kind of come out and we make a decent gain within a shorter period of time. So those are the ones I'm looking at. Again, and I'll give you the ticker symbols because I think I didn't do that one time. Somebody called me out in the comments. So Etsy, ETSY, Dick's Sporting Goods, DKS, Affirm, AFRM, Shopify is SHOP, SHOP. Then we got Macys, just M, just the ticker symbol M, which is always pretty prestigious, at least in my view. And then Bath and Body Works, BBWI. And obviously you want to look at Dillard's, which is DDS. So those are the, 1, 2, 3, 4, 5, 6, technically 7 that are in the retail sector that I think right now, environment wise, we know retail sales were up in October. I would imagine for November and definitely December, they're probably going to continue going up. I don't know. I have no idea what's going to happen in 2022. So that's why I'm not committed to holding all of these long term, just a few of them. All right, that's it for me. Let me know what you think about these in the comments below. And let me, if I miss one, let me know. All right, that's it for me. Talk to you guys later.